Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of Lake Avenue Financial. Let's review the markets from last week. All the major market indexes were in rally mode last week, helping recover the prior week's losses. We saw the S&P 500 go up 3.44%, the Dow was up 3.08%, and the Nasdaq was up 2.41%. VeriFone Systems reported fiscal fourth quarter earnings of $31 million. The maker of terminals for electronic payments posted revenue of $490 million in the same period. These results topped Wall Street expectations and sent the shares soaring to a 52-week high of $38 a share. The company has benefited from the new terminal sales as Apple Pay and other electronic wallet systems start to become more commonplace. We think that this growth will continue as more and more people become comfortable using this method of payment. Tech bellwether Oracle pleased investors with stronger than expected results. The company beat earnings and revenue estimates for the first time in a year, after missing 3 quarters in a row. Oracle's shift to the web-based cloud computing business is finally paying off and sent the share soaring more than 10% to over $45, which is the highest price not seen in more than a decade. Lastly, we had BlackBerry report third quarter results. The loss from operations came in at $148 million compared with a loss of $4.4 billion in the year-ago quarter. Adjusted net income per share of a penny was significantly higher than Wall Street's estimates of a loss of 6 cents per share. These results are a true testament to BlackBerry's new CEO, John Chen, who was put in place to turn the company around. Chen expects to have a strong cash position and hopes to generate break-even cash flow at the end of 2015. We think that he's well on his way as he is in the midst of taking BlackBerry from the device maker that we all know them for to a more diversified technology company. As we see more and more security breaches and hacks, like the one Sony just experienced, BlackBerry's secure devices and enterprise servers will become more and more in demand. As technology has evolved, most computers, smartphones, and other devices now rely on the backbone of the internet and the cloud services. The Internet of Things is a global movement where devices become connected to the internet. This includes cars, home appliances, wearables, billboards, credit cards, stoplights, amongst other things. IDC estimates there will be 212 billion connected devices and sensors by the year 2020. And in that same time, analysts estimate that the Internet of Things market will grow from the current $1.3 trillion to more than $3 trillion. That's only 5 years away, folks. Now, why do I bring this up? Well, as John Chen positions the company for the future, BlackBerry has a great opportunity to play a crucial role in the Internet of Things as it places its bets on big data and security, two very important components to the Internet of Things. We think that the future is bright for the company and expect a new CEO to help them become the dominant force for security in the enterprise world. We also had some major economic reports last week. We saw industrial production numbers at 1.3%. Housing starts came in at a little over 1 million homes. The CPI is at 1.3% year over year. The Philly Fed came in at 24.5%. And the major economic news was an announcement by the Federal Reserve to keep its policies unchanged. They said that they would keep the current funds rate for a considerable time as long as the projected inflation rate stays below 2%. Now, this news was a welcome one on Wall Street as stocks shot higher, but we at Lake Avenue Financial think that this is even better news for the bond markets. Now, let's take a look at the week ahead. We are going to see reports on existing home sales, durable goods, GDP, consumer sentiment, new home sales, and the jobless claims. Now, global markets witnessed increased volatility this week amidst declining oil prices and the accelerating depreciation of the Russian Ruble. In an effort to stem this decline, Russia unexpectedly raised its main deposit rate from 10.5% all the way up to 17%. The move was the largest single increase in Russian rates since 1998, when Russian rates soared past 100% and the government defaulted on their debt. However, the currency depreciated even further following this announcement. The ruble's decline mirrored that of oil's decline. Since the beginning of this year, Brent crude prices have fallen 43% and the ruble trades almost 50% lower against the US dollar. Now, as we know, Russia is a net exporter of oil and oil resources are government controlled, making the country particularly sensitive to price declines. Thank you for watching our video. We'd love to hear your comments. To watch some of our other videos and read our blog posts, please visit our website, www.lakeavfinancial.com. There you'll be able to subscribe to our weekly newsletter. You can also find us on Facebook, LinkedIn, and Twitter. Now, this will be our last weekly commentary for the year, so I'd like to take this moment to wish you and your family a happy holidays and a prosperous new year. We would like to thank our clients for their business and support throughout the year. We look forward to years of continued success and partnership. See you next year.